Well, fuel prices hitting another record today. We're now at a national average of $4.62 per gallon, as the reality that inflation is not going away is smacking consumers in the gut and the wallet. National Taxpayer Union EVP Brandon Arnold and Mayflower Advisors managing partner Larry Glazer both join me now. Larry, I'll start with you. Your reaction to what we're seeing, not just in the current contract today, but also, look, we can talk all about core inflation, stripping out food and energy, but food and energy is everything right now to the American consumer, and that's the economy.
Cheryl, as bad as gas prices are, the question we keep asking ourselves is there a breaking point? Is there a point where the consumer starts to buckle here, where we see that demand destruction that everybody's worried about? And, in Europe, overnight, we saw their inflation, and it is much more problematic there. But that doesn't hide from the fact that we've got our own issues here. And, look, it's summer driving season. The official start to summer. Gas up 50% or more in most markets. And, again, people are using credit cards to finance it. The personal savings rate is back to financial crisis levels. That's how they're reporting it. They're borrowing from the future. And I tell you what, Cheryl, it's a for now conversation, because come the fall, if gas prices are at these levels, we're going to have a real problem. They'll pay $50 to see Top Gun, but they're going to put it on their credit card, and they're going to borrow from the future to do it.
Well, and you know what, Brandon, let's pick up on that, because we are seeing the data come out that, despite what we've been hearing, frankly, from the Biden administration, that people are starting to save less and spend more. They're having to dip into those savings accounts. They're having to pull, to really cover the cost. They don't want to stop spending. They've been locked down for over 2 years. You've got this, revenge travel. We keep talking about it. So, but that demand destruction seems to be, there's an interesting dichotomy and kind of a fight, if you are, right now with the consumer and with businesses. Where do you see it?
Yeah, I think that's absolutely right. The numbers that Biden cited in his Wall Street Journal op-ed point back to the end of last year. We're now 5 months into this year, almost at the end of May here, and things have gotten worse. They've been clobbered throughout every single month of this year with record-breaking inflation. So people have dipped into their reserves. They have dipped into their savings accounts, and we are starting to see consumers hit the breaking point. That's showing up in consumer data that we're seeing at big box stores. Consumer spending is starting to taper off. It's 2/3 of the economy. Once we have that demand crash, once we see consumer spending really start to fall, we're in a real problematic place for this entire economy. Is very, very concerning. Yet Biden is out there saying everything is hunky-dory, everything is great. It's just not matching up with what people are seeing on a day-to-day basis.
Well, and Larry, I'll go back to that same issue and stay with the issue of inflation in the White House. And again, we are going to hear from President Biden and Jerome Powell. We expect to see them after they have this meeting at the White House to talk about inflation, which we're talking about that right now. It's interesting because when he laid out in this Wall Street Journal editorial yesterday, he basically said that here's his 3-point plan. My plan for fighting inflation: families have increased their savings and have less debt. We've already covered that piece of the pie here. But at the same time, the Commerce Department, again, that personal savings rate as a percentage of disposable income, that fell to 4.4% in April. That's the lowest level since 2008. And then I'll also send you with this question, the fact that, at the same, they're talking about potential price fixing. They're going after the evil oil companies. They're going after, the food companies. I mean, you take your evil empire of corporate greed of the day, and the administration seems to be missing the mark, but frankly, without proof.
Cheryl, people are so busy talking about high gas prices that they can't even get to the high food price conversation at the family barbecue right now because of the distractions. And look, as long as gas prices are at these levels, the Fed chairman and the president can meet all they want. They're not going to address the issue, and it's going to affect the president's approval rating. And we will see that play out in midterm elections come the fall. So their meeting, think of it as a bad meeting. It's almost an emergency meeting. It's very unusual to have these types of meetings. And there's very few things that the Fed is very much focused on fighting inflation right now. The concern is they're going to blink coming into midterm elections. They don't want to be the cause of the recession. They don't want that as part of their legacy. And that means they may be more dovish, which means inflation stays higher for longer to lay off of the market volatility. So I think we have a real concern here, and the concern starts with the pump, and it starts with the grocery store. And until you get those two issues and you take personal responsibility for it, the rest of it won't matter.
Yeah, no, people feel it, they see it, they're living it, and you can't, get their attention off of it. And you can't tell them that that the economy is great when they're feeling that it is not. Larry, I definitely want to talk to you about the markets. We'll check back with you later on, Brandon, as well. It's great to have you both with me during the hour.